Australia's inflation drops. What it means for interest rates. Australia's economy is cooling down, and it's sparking a big debate about whether interest rates should fall. Here's the catch. The latest inflation numbers show a sharp slowdown, hitting 2.1% year over year in the second quarter, its lowest level since March 2021. That's not just a minor dip. It's a signal that the cost of living is easing for everyday Australians. But here's where it gets tricky. While this supports the case for a rate cut, the Reserve Bank of Australia, RBA, has kept its policy rate steady at 3.85% so far this year, defying expectations. What's the holdup? Let's break it down. The Australian Bureau of Statistics revealed that the biggest price increases in the quarter came from housing, food, and healthcare. However, falling transport costs helped balance things out. RBA Governor Michele Bullock hinted in a July speech that inflation might stay near the lower end of the 2% to 3% target range for now, partly due to temporary cost of living relief measures. But she warned, as that effect unwinds, we expect inflation to rise again by late 2025 and early 2026. So, is the RBA waiting for more data before acting? The RBA has already cut rates twice this year, each by 25 basis points, after raising them to a 12-year high of 4.35% to tackle earlier inflation spikes. Yet, in its most recent meeting, the bank held rates steady, surprising economists. Why? The RBA's July meeting minutes revealed a cautious stance. Board members wanted to confirm that inflation would stay within the target range before making another move. They also noted stronger than expected growth in private demand and a stubbornly tight labor market. But here's the twist. Some analysts are convinced the RBA will cut rates again in August. Bank of America's July 25th note argued that the weaker global economy and a rising unemployment rate, up to 4.3% in June, make a rate cut inevitable. Commonwealth Bank analysts went even further, calling the inflation data a rubber stamp for a cut. They praised progress on housing costs and services prices, saying there's little risk of inflation surging again. The real danger now is if the economy underperforms, one analyst warned. And this is the part most people miss. Australia's GDP growth in the first quarter of 2025 was weaker than expected, expanding just 1.3% year over year. That's below the 1.5% forecast and a 0.2% quarterly gain, which fell short of the 0.4% target. ABS head Catherine Keenan blamed this on shrinking public spending and weaker consumer demand. Meanwhile, economist Mai Buie at AMP predicts 4 more rate cuts by mid-2026, pushing the RBA's policy rate down to 2.85%. So what's the takeaway? The RBA is walking a tightrope between cooling inflation and supporting a slowing economy. Some experts are pushing for action, while others are holding back. Do you think the RBA should act now or wait and see? Share your thoughts in the comments.